Now it's at the point where if I have money in my account, it actually pisses me off because I don't want it to be there. I want it to be invested. There was a huge amount of froth in the market. During that period, I would have a couple million or more in cash, and it really annoyed me. But I had to stay true to what my investment philosophy was. If you didn't know that it needed a roof replacement, who cares? You just need to ignore it and not let your ego interfere with your overarching goal, which is to buy good quality assets with good figures attached to them. They came from difficult beginnings. I was in a lucrative industry at the right time with the right skill set. I didn't care about having a 100 million portfolio. It was, I want something to work on. I also want safety. How do I accomplish that?
In today's episode, we chat with a valued client of ours at InvestorKit. Michael Thomas is here to chat all things commercial and his business as well. Now, we've purchased 6 commercial properties here for Michael and taken his portfolio of assets to just under $20 million. Now, Michael's a very successful young business owner. He's in his early 30s and in his best year has taken his company to revenues of just under $90 million. No small achievement. As a successful entrepreneur, he talks about his business success, and how his mindset has shifted in business to make sure commercial property and the mindset he has when looking at his business and investing and how you can bring success together. We dig deep into Michael's business, his portfolio, and actually even some of his assets. We go through a live deal review where we unpack some of the properties we've purchased for Michael, why they stood out, and why we've structured his portfolio in the way that we have. So let's jump on into the Commercial Property Investing Show. Michael, welcome to the show, mate.
Thank you.
Mate, you've been on a really special journey with us together, both as friends, but also as a client. And we've gone from residential through to commercial property on your journey. Mm-hmm. We're on the Commercial Property Investing Show today. And many of the commercial property investors we work with are business owners.
Yep.
And so what I'd love to really get a good understanding of is the business industry you're in. Could you tell me what you do for your business?
Yeah, so I'm in the motor industry, and that includes a retail and wholesale component. The wholesale component is basically distributing cars to multi-franchise and big warehouse dealers across Australia. So if you think, as an example, Peter Warren, Toyota, or any of the franchises they have, they need used cars. We supply some of their used cars to them so that they can sell to the public. We've also got a retail space where our business sells to our sister business, which then sells to the public.
Got it.
So wholesale and retail component of selling used cars.
Got it. Now, you've been in business for a few years now. What's the growth been like in your business itself? Like, what's some of the milestones you've achieved when it comes to growth, whether it be in team, revenue, outcomes, things like that?
It started off extremely strong. I was very lucky to join the industry, at least from a business owner perspective, at a very dominant time, which was during COVID. I knew that wouldn't last forever. And so most of my peaks, or effectively all of my peaks, were during that period. And that's when I put in the most amount of effort. So I think we got as high as like 90 mil in revenue. It sounds better than what it actually is in reality, because you're dealing with an expensive product. So if you're buying $100,000 items with relatively small margin, you can tell everyone that you're doing 90 million in revenue, but you're not making anywhere near that amount of money. So I like to make that clear. The team was at its smallest then, funnily enough, and it's now at the largest or somewhere around there. We're not huge. I think we've got 12-ish people, something like that. And the revenue is at a smaller amount. But that was to be expected, and it's all kind of going as I planned. I wanted to make as much as I could while things were as strong as they were. And now that they're not as strong but still good, I'm trying to find a little bit more balance in my life.
Now, that's tremendous success in the business. What's driven specifically the success for you as a business owner?
I think probably like most people, if you find something you're good at and you can work efficiently, effectively, and a lot, you will get a good result. And that's largely what I did. I was just completely committed to my work. I was good at what I did. I had good people around me. And obviously, as I said, there was some good timing there as well. Like, if you were to be the best newspaper writer in the world selling newspapers right now, it's probably not going to be a great endeavor. I was in a lucrative industry at the right time with the right skill set. So largely, it's all of those things.
Got it. in your business, is it very capital intensive?
Yeah.
Is there a lot of reinvestment that you need to make considering the trajectory and the scale you've got it to?
Hugely capital intensive. And so for me, that's been a point of concern in that for every $1 million that I make, that really only affords me to put on one pretty solid buyer. That's largely how you're going to scale a wholesale company is you need more people buying more cars. And so obviously for every new person that you put on, they're going to require capital to make their purchases, right? And so to expand a team of buyers, you're going to have to just keep pouring or keeping that money in the business so that they have capital to spend. So yeah, extremely capital intensive. I don't work with a huge amount of capital now, like probably a few million, but some of the big groups, they need tens and tens of millions of capital just to hold their stock. And remember as well, that's holding stock, it's a depreciating asset. So there's a lot of risk that comes with that as well.
Now, if you don't mind me asking, for people who are, just seeing this level of success in business and unsure, how old are you and when did you kick this off?
I'm 32. I can't remember when I started the business. I think I was 28.
Yeah.
But I was doing effectively the same thing for another business for the about 4 years prior. And so it was a seamless transition. I was already given the opportunity to build a business for the company that I work for. And then when I moved over to do it myself, I was largely just doing the same thing. So it wasn't a difficult transition for me at all.
Yeah. Now, in this particular podcast, we love going into the business itself and also the world of commercial property investing. For those who are tuning in and you'd love to just hear more about Michael's personal journey, his story, what the world was for him before business, we've actually recorded another episode on the Property Nerds podcast, which you can go and check out. We'll chuck the link in the show notes so you can actually check that out and be able to learn more about Michael's journey if that's of interest to you. But Michael, on the world of commercial property, I want to talk about reinvesting cash, right? And Chris, you see this often.
Yeah, so business owners, not all business owners, but business owners like yourself that are successful, have built up a lot of cash. It's just a machine that keeps churning. Cash gets built up. There's like I wouldn't say all the time, but there's a psychological barrier that maybe business owners might have an attachment to that cash.
Yeah.
Were there any hurdles for you in letting go of that cash to go into commercial investment?
For me, not necessarily. I think to a degree, it's always fun looking at $1 million or $2 million just sitting in your account. Like, it's not a bad sight if you open your bank account. But I was always conscious of the idea that that money will be eroded over time. $1,000 in the 1900s is not what $1,000 is today. And so I was conscious of the fact that letting that money sit there isn't going to do me any long-term favors. And so now it's at the point where if I have money in my account, it actually pisses me off because I don't want it to be there. I want a safe amount of buffer, of course. So I don't want there to be $0, but I know largely what my spending requirements are, both for the business and personally. And as long as I have enough to cover those potential worst case scenarios, anything further than that, I want it to be invested. And so that's kind of been the goal. There was actually a period during COVID where, for me at least, I thought there was a huge amount of froth in the markets, and I made the decision to pull back and hold my investing journey for what turned out to be maybe 12 or 18 months, I think. I can't quite remember. And during that period, I would have a couple million or more in cash, and it really annoyed me. But I had to stay true to what my investment philosophy was, which was to try to invest when people are fearful and pull back when people are greedy. That's stolen from Warren Buffett. So having that investment philosophy has served me well, and I've tried to stick to that as best as possible.
Speaking about investment philosophy, we have bonds, we have stocks, we have crypto. There's an array of different investment vehicles that you can have out there.
Yeah.
What made you dive into the commercial property investment space?
So I started with real estate. I can't remember how many I had there first, like 6-ish or something like that. And really, after talking with Aj and the IK team, it became obvious that to move to commercial made sense from a yield perspective. Because ultimately, the reason why I'm all doing this isn't so I can tell people that I have an X $1 million portfolio. Like, I don't really care for that. The goal of this was psychological security knowing that I have a passive income in the case that I had a mental breakdown and didn't want to work anymore. Now, that's probably not going to happen, but I am an anxious person and I like to work off worst case scenarios. As I've spoken about in the previous podcast, I came from difficult beginnings. And so there's always going to be a part of me that is concerned that I will find difficult times again. I don't think that I will, but there's a part of me that's worried about that. And knowing that if I ever do come across a path that involves difficulty, or even in the case that I need to stop work to look after my dad or whatever it might be, injury, to know that I've got a few $100,000 that's going to be coming in that I can largely rely on adds a huge amount of safety to my mindset. So that was always the overarching goal. Like, I didn't care about having 100 million portfolio. It was, what is this going to offer me from a cash flow perspective in the case that I ever needed it.
Loving the show and keen to invest? Well, book your free discovery call and we'll actually walk you through how to build a high growth portfolio without all the guesswork. Just jump onto the link in the show notes or visit investorkit.com.au to book your discovery call. And now let's get back into the show. Each of these commercial purchases can vary in price points from, hundreds of thousands to millions of dollars. When it comes to the decision on a purchase ticket, I feel in the residential world, people look at it and go, oh, 600 to 800, we work in these parameters and it feels good, it feels safer. But we see it often in the commercial world, the safer deals are actually the bigger the ticket sizes. And so when it comes to commercial though, a lot of money has left the bank account for the deposits. Mm-hmm. When you look at a commercial deal, what to you is it that makes it feel like, hey, this is a good deal?
Predominantly yield, because again, it's all about what your goal is, right? So my goal has always been passive income. So yield is the most important thing to me. Obviously, it needs to be safe yield. I don't want something that's on a 1 week lease and gives a 10% yield, but it's an office in the city where there's an abundance of that. So I'm conscious of asset type and lease term, but if I had to pick one thing, it would be the yield amount so that can lean into my overarching goal.
Got it. Now, on that overarching goal with yield and passive income, have you ever had moments where, the passive income's strong, it's commercial, it goes through where, it's better than putting it in residential or other assets when it comes to income, but then you look at this cash and you're like, I could also put it back into the business. When you have those thoughts of money going back here or back here, what made you feel so certain about property specifically that makes you want to park that aside rather than constant reinvesting?
I think it depends on the business that you have. So I'm personally not looking to build a mammoth business that takes over the world. I'm satisfied with where it is. And so because of that, I've always wanted to accomplish both at the same time. I didn't want to isolate one to ignore the other. So I don't want only a business without any safety net. I don't also only want safety net without something to actively work upon. So I've never taken more out of the business that would compromise my ability to manage and run things the way that I need to from a business perspective. But I've also never kept too much in the business that would prevent me from expanding in a way that's safe and reliable for me on an investment front. So it's really just been being mindful of, again, my own personal goals and what I'm trying to achieve. I want something to work on. I also want safety. How do I accomplish that? And it's been balancing funds in both spaces.
So Chris, when it comes to Michael's portfolio, the commercial aspects of it, what total value size have we added in terms of commercial assets for Michael?
Over 7 mil.
Right. Now, with the over 7 million purchases that we've done, how many assets is that across?
It's across 5 assets at the moment. Yeah.
So 5 investments, and we purchased one also, I think, for his
business as well, for owner-occupier asset.
Got it.
Yeah, it's main range.
Now, how much passive income is this portfolio pulling in?
Over 200K passive income.
And that's just on the commercial, because we've actually also purchased, Michael, I think, over 6 residentials now.
That's right. Yeah,
so that's just the commercial side.
That's right.
So why have we structured the portfolio in this way? What makes it important for us to do that for Michael?
Yeah, 3 reasons. So diversity, 1. Second is risk mitigation from a vacancy perspective. No one asset's going to be vacant at any given time. And the third is defensive assets as well. We want to be spread across industrial and medical assets. We know, you and Arjun and I know, if another COVID situation were to happen, we know those assets are protected.
Absolutely. And see, that's an important part I like about commercial. Like, we love doing the 7 and 10 and million plus deals, but at the same time, we don't want that customer's only position to be that singular deal. We really believe in diversity, having multiple industry types. And like you said, you don't want one lease for your whole commercial portfolio to be everything. Like, we have 5 leases here. Like, that's powerful. Actually, more than 5 leases when you think of the sub-assets. But let's go into a particular deal. I want to start off with this one. This is an absolute unicorn. In regional Queensland, we secured this particular deal. How much did we pick it up for?
We picked it up for 2.745 mil.
Okay.
So almost 2.8.
And in the net yield scenario here, where did you end up landing?
9%.
Michael's stoked with this one.
He is.
So over 9% net yield. Now, typically people look at that net yield and go, some red flags surely, because yield is also a risk measurement. What allowed us to go, no, hold on a minute, it's the different case here. What allowed us to A, get that yield, and B, get this asset, before the masses see over 9% yield and get it before us?
Yeah, so when we look at it from a risk mitigation point of view, so anything above 7%, you're looking at dilapidated assets that long, like downtime periods, so longer periods of vacancy, for instance. But this asset here has multiple uses. So we have industrial, we have medical in this asset class. So it's a mixed use asset. Within that pocket, within that region in Queensland, 0% vacancy.
That's massive. And just being able to show that to someone too, like, let's look at the internet, let's see what's available. Nothing.
That's right.
Massive.
10 different tenants as well. So it's a multi-use asset. One head lease to one tenant, meaning you're not dealing with 10 tenants, all individually. You're dealing with the one tenant, where that one tenant pays us the rent. And there's also a director's guarantee, a bank guarantee to that one tenant as well. And those other 10 or 9 tenants are sublet tenants. So those sublet tenants pay that one head lease the rent. And actually, that head lease is making money or more money. They're pretty much living rent-free in that asset because those other tenancies are covering their rent.
Yeah, so it's almost like a win-win-win. Michael's winning on the net yield he's getting. The tenant's winning because of the sublease arrangement. And we're winning because we've got such solidity because our tenant's operating essentially in a property with no cost to them. So why would that business ever move?
That's right.
And then underneath that, they've got different layers of businesses. So it also attracts people to use the things in the center because there's so much going on. There's lots of different things going on. But the thing I want to say here is with this particular asset, what really impresses me the most is that we weren't just, hey, Michael, check this. Look at the great net yield. It's like, hold on a minute. I know this net yield's great, but risk mitigation here, vacancy and data points here. All of these key points were strong. Let's go to asset number 2. So we're heading over to New South Wales. This particular one is the market of Newcastle. Let's talk about this property.
Yeah, so this one in Newcastle, purchase price 1.81, net yield 6.12%. And that's bringing in a net rent of 110K, 111K.
What type of business was there and what made this asset quite compelling for you?
Yeah, so this business has been around for 25 years.
Yeah, wow.
It's an air conditioning business. So when you look at the industry type, is this going to be impacted by things like AI, white collar industries? Not really. It's a blue collar industry, very safe, very robust. Also, the asset was just built 3 years ago. So in terms of asset capex risk, low. We're buying in a location where virtually the vacancy rate's 2%.
Yeah.
Buying a brand new asset that's very lettable, and we've got a strong tenant in there that's been around for 25 years, but they've just signed on a 5 year lease.
Massive. So we've got depreciation high, net yield healthy, long business history, healthy numbers in terms of the purchase price. We're not going millions and millions and millions deep for that. At the same time, we've got a business that's quite strong when it comes to not just time and history, but the industry type, right? So that's deal number 2. Let's move on to deal number 3. This is the one in WA. Now, we've actually talked about this, like how the roof needed replacement, and we were able to get some savvy negotiations on that one. Big shout out to our legal team that we work closely with, KG Co Legal, who was able to negotiate tens of thousands of dollars off for a legal for that roof itself to be replaced. But talk to me about this deal. What makes it special, and why did Michael go, hey, let's get this? This is an awesome deal.
So when we look at medical assets, Normally, you'll have two different types of dental practitioners. You'll have a corporation where there'll be many dentists working out of that one asset, or there'll be a single operator dentist. In this particular situation, it was leased to a company called Bupa Dental, and they're headquartered, massive corporation headquartered in London.
Yeah.
They've been there for 15 years already, and they just signed on a brand new 5x5 year lease.
So big business name, industry types what we want. The asset itself, what did it yield at?
7.15%.
Massive. So net yield. So this is the thing, right? You can find those deals where the security and the net yield are there together. And it just comes by being able to have the right relationships, negotiate well, be able to look at the deal in different ways. Now, for this particular one here, where was this one located?
It was located in WA, Perth.
Okay,
Yeah.
awesome.
Yeah, so about an hour south of Perth.
Well, over $7 million in purchases here for Michael. Michael, we're stoked for this in terms of this portfolio here and the passive income that we've been able to build. But also from what I can see here, it's diversity, it's risk management, it's multiple tenancies. And so as we're building out commercial properties, we're taking principles of residential, placing into commercial, but with a different magnifying glass on the way we look at the deal. And so just wanted to share some of these deals here for people listening or watching the podcast, and being able to know what's actually behind the success of some of our clients and what we've achieved for them. Now, if you're looking at these deals and you're going, hey, look, Aj, I'd love to have something like that for my portfolio, commercial properties, between that sort of 2 million plus is where we're helping a lot of clients out at, then reach out to us at investorkit.com.au and speak to one of our team members, and we can go from there. So on a couple of these assets we've just been reviewing, there were some curveballs that came up. We're talking works required on the property, roof replacements is one of them as well.
Yep.
What has had you, from a mindset perspective, get into looking at deals and negotiations in a certain way where certain things don't phase you? Because typically when we see certain buyers, a roof replacement sounds scary.
Yeah.
What helped you go, I want to see this out, as in negotiations, where we land, rather than suddenly going, red button, I don't feel good about this? What's this that goes through your mind?
I think you just need to be able to regulate your emotions, because ultimately if you didn't know that it needed a roof replacement, but the total asset and all of the figures still look good on paper, then who cares? So if you've got a $3 million asset that needs a 50 grand works done to it, but even at $3,050,000, it's still a good asset. Then, in my opinion, who really cares? You would if you would still buy it at $3,050,000, then you just need to ignore it and not let your ego interfere with your overarching goal, which is to buy good quality assets with good figures attached to them. So as long as the numbers all look good and it's not going to be absolutely damaging, like if it was like a multiple hundreds of thousands of dollars of damages that were going to move the yield from 6% to 2%, of course I would put a red button on that, but you guys would as well. So if you guys are happy and I'm happy with the figures, then it makes sense to just continue to move forward.
Now, when it comes to the rest of the deals that we looked at here, these deals obviously showcase one thing where not once, not twice, but multiple times over, you've used our team to help you to build a portfolio. And I want to go into the topic of building a team around you.
Yep.
When it comes to the wealthy, in terms of the wealthy people in this world, it's funny that they actually build these massive teams around them. But when someone's trying to build wealth, they often do the opposite of what the wealthy do, and they want to take it DIY. They want to give it a crack themselves instead of having that team around them. I'd like to know your psychology around building the team that you've got, whether it be your legal professionals, us on the commercial and property side. What made you, A, constantly focus on building the team and use them regularly, but then B, not go, I want to just now do this myself, or I want to give it a crack myself?
Yeah. So I think if you're a professional that's found any amount of success, you'll probably realize that the reason why you found success is because you're good at the thing that you do. And if you expect that you can immediately achieve the same results in another industry, then I think that's completely foolish. I understand that, or at least I believe that to be true. I know that I'm good at what I do, and I'm good at what I do because of, if we look at just figures, I've been involved in more than 10,000 purchases of cars. which I think I figured out means I've looked at over 1 million listings. So that's not, I think it's multiple millions of listings that I've looked at. That's a huge amount of reps. And so with that experience, I obviously have competency. And similarly, you guys, or even anyone else in my team, has expertise that I don't have, which make them more proficient and effective at the things that I need them to do for me or with me. So I think it just makes completely logical sense. And if you want to add in as well that I'm lazy and I don't want to do it myself, then that's probably a component to it as well. I think if you have a successful business, there's another point, and that is, why would you want to distract yourself from making money in the space that you're most effective at, trying to do something that you don't have the skill set to compete in properly? Because what can end up happening is you end up just performing worse than you could have otherwise in your business, meaning you make less money. And then what's doubly worse is you're also not going to get as good of a result if you had have hired the people around you that are competent. So you end up with 2 underperforming areas of your life. I just don't think that makes sense. So I've chose to go about it the way that I have.
Well, Michael, it's been good to catch up with you today, mate. And just congratulations once again, not only on your portfolio success, but your success in business. I'm sure that people listening to this podcast aren't only going to see the importance of how, transitioning wealth from business into property is so important, and that too commercial, but also see, the success that can be had in entrepreneurship and building a business and doing it at such a young age as well. So, mate, thank you for trusting us on the journey and building a portfolio here together. Chris, it's been awesome to unpack some of these deals as well and just see some of the impact that they make at an asset level and portfolio level. And, mate, looking forward to sharing more of your success ahead.
Awesome. Thank you very much. Appreciate it. Thank you.
Thank you.